The history of the stock market is a fascinating journey that spans several centuries, evolving from informal gatherings of traders to the highly sophisticated, global financial systems we see today. Here's an overview of its development, early beginnings. Origins in Europe. The concept of stock markets began in the 1600s with the rise of joint stock companies. These companies allowed investors to pool resources to fund large ventures, such as trade expeditions or colonial enterprises. Dutch East India Company, often considered the first publicly traded company. The Dutch East India Company issued shares on the Amsterdam Stock Exchange, the world's first formal stock exchange. Investors could buy and sell shares, making it the earliest example of a stock market. 18th century, expansion and formalization. London Stock Exchange. The London Stock Exchange was established, becoming a central hub for trading shares of companies, particularly those involved in colonial trade and industrialization. Buttonwood Agreement. In the United States, 24 stockbrokers signed the agreement under a buttonwood tree on Wall Street in New York. This agreement laid the foundation for the New York Stock Exchange, which was formally established in 1817. 19th century, Industrial Revolution and growth. The Industrial Revolution led to the creation of numerous companies requiring capital, which fueled the growth of stock markets. Railroads, steel, and oil companies were among the most traded stocks. Global expansion. Stock exchanges opened in major cities worldwide, including Paris, Frankfurt, and Tokyo. Telegraph and communication. The invention of the telegraph in the mid-1800s revolutionized stock trading by enabling faster communication of prices and transactions across regions. 20th century, modernization and globalization. Stock market crash of 1929. The Great Depression began with the infamous stock market crash of 1929. Leading to widespread economic turmoil and the implementation of regulations like the Securities Act of 1933 and the creation of the Securities and Exchange Commission in 1934. Post-World War II. Boom. The stock market experienced significant growth after World War II, driven by economic expansion, technological advancements, and the rise of consumer culture. Electronic trading. The 1970s saw the introduction of electronic trading systems, such as NASDAQ, the first electronic stock exchange. This innovation increased efficiency and accessibility. Globalization. By the late 20th century, stock markets became interconnected, with investors trading stocks across borders. The rise of multinational corporations further fueled this trend. 21st century, technology and innovation.com bubble. The late 1990s saw a surge in technology stocks, leading to the dot-com bubble. Its burst in 2000 resulted in significant losses, but also paved the way for the rise of companies like Amazon and Google. Global financial crisis. The collapse of the housing market in the U.S. triggered a global financial crisis, causing major stock market declines. Governments and central banks intervened with stimulus measures to stabilize markets. High-frequency trading and algorithms. Advances in technology led to the rise of high-frequency trading and algorithmic trading, which now dominate much of the market activity. Retail investing. Boom. Platforms like Robinhood and the rise of social media have democratized investing, enabling retail investors to participate more actively in the stock market. Cryptocurrencies and blockchain. The emergence of cryptocurrencies and blockchain technology has introduced new asset classes and challenged traditional financial systems. Key milestones in stock market history. 1602. Dutch East India Company issues shares on the Amsterdam Stock Exchange. 1792. Buttonwood Agreement leads to the formation of the NYSE. 1929. Stock market crash triggers the Great Depression. 1971. NASDAQ becomes the first electronic stock exchange. 1987. Black Monday sees the largest one-day market crash in history. 2008. Global financial crisis shakes markets worldwide. 2020. COVID-19 pandemic causes a rapid market crash followed by a swift recovery, driven by stimulus measures and tech stock growth. Current trends. ESG investing. Environmental, social, and governance criteria are increasingly influencing investment decisions. Artificial intelligence, AI, is being used for market analysis, trading, and risk management. Globalization and emerging markets. Emerging markets like China and India are playing a larger role in the global economy and stock markets. The stock market continues to evolve, shaped by technological advancements, regulatory changes, and shifts in global economic power. Its history reflects the broader story of economic development and human innovation. Thank you very much for being with us. We hope you will always be by our side by comments, and sharing the video. You will also be well and take care of your health. Thank you.